Good morning everyone, this is Charalambos Pissouros, Senior Analyst at IronFX, bringing you the morning comment for the 10th of January. China's producer prices rise at the fastest pace in 5 years. China's producer prices rose at the quickest pace in 5 years in December, reinforcing the case that the economy may be stabilizing, at least on the inflationary front. Producer prices in the world's second biggest economy accelerated to 5.5% year over year from 3.3% previously, well above the expected 4.5%. On a disappointing note, the CPI rate for the month unexpectedly slipped somewhat. Nevertheless, we doubt that the slowdown in the CPI will be much of a concern for People's Bank of China officials, since the surge in producer prices is likely to translate into higher consumer prices in the future. Given these signs of rising stability on the price front, we believe that the currencies of nations with heavy trade exposure to China, such as the AUD and the Kiwi, could remain supported in the near term. Yesterday, AUD dollar broke above the resistance, now turned into support of 0.7340 and the downside resistance line taken from back at the peak of the 8th of November, which in our view shifts the short-term bias to the upside. As a result, we would expect the pair to continue trading higher in the next few days and perhaps challenge our next hurdle of 0.7425, defined by the inside swing lows of the 8th and 12th of December. However, we believe that part of the improvement in the PPI is owed to the devaluation of the yuan throughout December. Even though Chinese officials took steps to defend the currency in early January, which led to an enormous rebound in the yuan, it remains to be seen whether these measures will be kept in place and whether they will have the desired effect. Thus, although an improvement in the PPI may be positive for commodity currencies, AUD and Kiwi in the near term, if the yuan comes back under sustained depreciation pressure, this year imports to China would become more expensive and thereby demand for Australia's and New Zealand's commodities could be hurt. This in turn could adversely impact AUD and Kiwi in the longer run, in our view. Indeed, on the daily chart, AUD dollar has been printing lower peaks and lower troughs since the 11th of November, when it broke below the upside support line taken from back at the 20th of January 2016. As such, we would treat the latest recovery or any extensions of it as a corrective phase for now. Moving to the US, the dollar underperformed its major peers during the European Day Monday, and that weakness continued throughout the Asian morning Tuesday. News flow was relatively light and the economic calendar was almost empty, implying that the moves may have been primarily flow-driven. Perhaps investors took some profits on their long dollar positions ahead of President-elect Trump's press conference tomorrow. Dollar yen edged lower on Monday after it hit resistance at 117.50. During the Asian morning Tuesday, the pair fell back below the 116 obstacle, and as such, we would expect the bears to aim for the 114.75 support soon. A dip below that barrier would confirm a forthcoming lower low on the 4-hour chart, and it's possible to set the stage for extensions towards our next support of 113.15, defined by the lows of the 5th and 8th of December. Zooming out to the daily chart, though, we still see a cautiously positive medium-term picture. However, the negative divergence between our daily oscillators and the price action is still in place, which enhances our view for dollar yen to continue correcting lower in the short run. As for today's highlights, during the European Day, Norway's CPI data for December are coming out. The forecast is for both the headline and the core inflation rates to have risen. This is likely to be pleasant news for the Norges Bank, which at its latest policy meeting noted that there are prospects for inflation to be lower than projected. We think further improvement in the profile for inflation could bring NOK under renewed buying interest. In the US, the NFIB Small Businesses Optimism Index for December and JOLTS jobs opening for November are due to be released. From Canada, we get building permits for November. For more information, please read the full comment on IronFX.com or download our app to get all the information you need to trade. Also, you can follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Charalambos Pissouros, Senior Analyst at IronFX, wishing you solid trading.